Everyone is talking about Bitcoin reaching the $100,000 mark, and people seem to be getting rich overnight. Yet you might be sitting there wondering what exactly they are investing in. Don't worry, you are not alone. Today, we are diving into the fascinating world of cryptocurrency, what it is, how it functions, and why it might matter to you. Let's start with something we all think we understand: money. For most of your life, money has been straightforward. It consists of physical cash in your wallet or numbers in your bank account. Governments print it, banks manage the flow, and you use it to purchase goods. However, traditional money faces challenges. If you want to send cash overseas, be prepared for a 3-day wait and high fees. Need to transfer money on a weekend? Unfortunately, banks are closed. Remember 2008, when trusted financial institutions nearly collapsed the global economy? Traditional money forces us to rely on middlemen like banks, governments, and payment processors, who all take a cut and control how you use your own funds. This is precisely the issue that cryptocurrency was designed to resolve. At its core, cryptocurrency is digital money that operates without the need for banks or government oversight. It is a reimagining of currency for the Internet age. The most prominent example is Bitcoin, created in 2009 by an unidentified individual or group known as Satoshi Nakamoto. Bitcoin emerged shortly after the 2008 financial crisis, during a time when public trust in banks was at an all-time low. The core idea behind Bitcoin was to create a system that works without requiring trust in any central authority. Since then, thousands of other cryptocurrencies, known as altcoins, have been developed. These include Ethereum, Dogecoin, and Solana. While they function differently, they all share the same fundamental principles. If you are still watching, I am impressed. Since you are clearly curious, please take a second to like and subscribe. Go ahead, I will wait. Thank you. Now, let's explore how cryptocurrency actually works. The technology behind it is called blockchain, and it is quite ingenious. Imagine a giant public spreadsheet that tracks every transaction made with a specific cryptocurrency. Now, picture this spreadsheet not stored on a single computer, but on thousands of computers worldwide, all updating simultaneously. That is essentially what a blockchain is. For example, if I want to send you 1 Bitcoin, my transaction is broadcast to the entire network of computers, called nodes, instead of going through a bank. These nodes verify that I have the funds, record the transaction on the blockchain, and then it is complete. No bank approval, no waiting for business hours, and no questions asked. It is a direct transfer from me to you. To use cryptocurrency, you need a digital wallet. Think of this as your personal bank account, but unlike a traditional one, you have total control. A wallet has 2 parts: a public key, which acts like an account number you share with others, and a private key, which acts like a password. Never share your private key. If someone obtains it, they can steal all your cryptocurrency, and there is no customer service line to call. Once it is gone, it is gone. There are significant advantages to using cryptocurrency. It is global, allowing you to send Bitcoin to someone in Japan as easily as to your neighbor. It is fast, enabling international transfers in minutes rather than days. It is secure, as the encryption and decentralized nature of blockchain make it difficult to hack. Most importantly, it gives you complete control over your money. No bank can freeze your account. However, there are serious downsides. Cryptocurrencies are incredibly volatile, with prices potentially swinging 10% in a single day. They are not yet widely accepted, so you cannot easily buy groceries with Dogecoin at most stores. The learning curve is also steep, as managing your own keys can be complex.
Additionally, cryptocurrency has a reputation problem as it has been used for illicit activities. To get started, the simplest method is to use an exchange like Coinbase or Binance. These platforms allow you to connect your bank account and trade regular money for crypto. In the past, people could mine Bitcoin using home computers to verify transactions and earn rewards. But today, mining requires specialized equipment and significant electricity, making it less accessible for the average person. Some people earn crypto directly through employment or by using specific apps. Why do people invest in it? The most obvious reason is the potential for significant returns. Bitcoin started at almost zero and has reached highs of over $69,000 per coin. Early investors made life-changing wealth. Others invest because they believe in the technology and a decentralized financial future. Some use it to diversify their portfolios alongside stocks and real estate. However, much of the activity is driven by FOMO, or the fear of missing out. The barrier to entry is low, as you can start with as little as $10.
My honest take is that cryptocurrency is both a revolutionary technology and a form of high-stakes speculation. It could change the future of money, or it could crash. If you decide to invest, only use money you can afford to lose. Treat it like a trip to Las Vegas. Fun, but don't bet your rent money. Do your research, as not all coins are created equal. Think long-term and do not rely on crypto as your only investment. For every millionaire story, there are thousands who lost money to scams or failed projects. Ultimately, cryptocurrency is an intriguing experiment. Whether it becomes the future of finance or just a footnote in history remains to be seen, but understanding it now puts you ahead of the curve. The underlying technology, blockchain, has already begun changing industries far beyond finance. Thanks for watching, and be sure to check out my other video on how the stock market actually works. Don't forget to subscribe.